Aloha and welcome back to the Kupuna Connections television series. I'm Cullen Hayashida, and we are on our weekly show this week having to do with reverse mortgage. During this time when we have so many people in need of monies, people are real estate rich and cash poor, this issue is a very important one. So our topic today is reverse mortgage. Can this finance my aging in place at home? And before we get started, let me have my guests and my co-hosts introduce themselves. And first of all, Tony.
Okay, my name is Tony Hathaway, and I'm the education coordinator with the Kapi'olani Community College Kupuna Education Center.
Carrie?
I'm Carrie Watanabe, and I work for Reverse Mortgage Specialist of Hawaii as a senior reverse mortgage specialist. I've been with the company since 2004.
And I'm Jean Secchi. I'm the president and owner of Reverse Mortgage Specialists of Hawaii, and I have been doing reverse mortgages since January of 2002.
Well, okay. Thank you very much, both Carrie and Jean.
Thank you.
Appreciate you being here to share your expert knowledge with the community. Of course, we know that this whole topic with regards to reverse mortgage has been discussed for years now. Many people have heard about the term. Some people are much more knowledgeable than other people, but we've all heard about the term of this whole issue with regards to the fact that people are real estate rich and oftentimes cash poor. And of course, in this day and age when we have such great difficulties about thinking about how we're going to pay for our retirement and our long-term care issues, this becomes a big concern. But let's start off initially with this whole question as to what is reverse mortgage?
Okay. A reverse mortgage is where a person can access part of the equity that they have in their home. And of course, there are qualifications. So first of all, one has to be at least 62 years and older, and they have a home. It's got to be their primary residence.
Oh, I see.
And they can extract a portion of the equity that they have in their home. And that's basically what a reverse mortgage is. They can either take it in cash up front, or they can take it little by little on a monthly basis or as needed.
Okay.
So
now,
very flexible.
You've given us a little bit of a slide that I think might be very helpful for our viewers to see. So let's look at this particular slide that we have that indicates what reverse mortgage is, and perhaps you can kind of go over some of these points again very quickly.
Okay.
So yes, the seniors have to be 62 years or older, and it is a way that you're accessing the equity from your home and converting it into cash. The money can be used for any purpose, no restrictions. It's non-taxable, and the best thing about it is that there's no monthly repayment while they are living in the home.
Okay.
Okay.
So when you say use it for any purpose, that means you can go and play with that money?
Sure.
Yes.
Exactly.
Many people use it to pay off mortgages, existing mortgages, home care, medical care rather. You can use it for travel. It's been used to pass on early inheritance to their children now. So many ways.
Oh, there are so many usages. And today, with private schools being so expensive, and kids in Kapi'olani and Punahou need a little help from their grandparents. And so grandparents are using this as a means to help the grandchildren, or even their children if they want to buy a home. And now is a great time for people to actually buy a home because the prices are pretty good, and the interest rates are pretty good as well. It's a little difficult, but they can navigate through getting a loan. So that's
now,
a great way.
I'm sorry, we had this other graph that you shared with us, and I thought maybe this might also be helpful to explain what this is all about.
Sure.
You want to start?
Let me just explain
What this graph is.
Yes. How it works is this. We want to show a house, okay? And the house is where, this is the asset that the seniors have actually accumulated. Now, when you do a reverse mortgage, just look at it as a portion of that house is accessible. The portion of the equity is accessible to the senior borrower. And there is a portion that is reserved for the lender, because on these reverse mortgages, Carrie had indicated, there would be no monthly repayments like on a regular loan. So the interest then accumulates over time. And so that's the reason why a portion of the house has to be kept aside, the equity has to be kept aside for the lender, because that's the accumulated interest. So just look at a portion of the house. After you take the cost of doing this loan, and if you've got a portion that you still have to pay off on an outstanding mortgage loan, the difference of the bottom of that house is really for the senior borrower to access. And that is the portion that the person will have access to. It can be taken lump sum is in many cases because they're trying to pay off an outstanding debt, or accumulation of outstanding debts, could be credit card, house, home equity credit line. That's all that portion that they can have, okay? And the top portion is reserved. And it's reserved for future use. And because as the interest accumulates, that portion is going to be eaten up by the interest, and that goes to the lender. I think that was the best illustration of how the equity is used up and how the equity is then allocated.
Yeah, I think that helps to see that, and, to see the house, and it's sort of that bottom part is the part that goes to
That's-
the person who owns the house
Right,
and is going to get the reverse mortgage. I know, seniors are often concerned about making the right decisions, and, sometimes they've been talked into doing things that they shouldn't do. So if I'm a senior, how do I know that I'm making the right decision if I do a reverse mortgage?
Shall I? First of all, the most important thing is to always learn as much as you can about a reverse mortgage, so that there are resources such as AARP and the National Reverse Mortgage Lenders Association. Those agencies are very good to gather information. But on top of that, the government has made sure that before the senior borrower actually does a reverse mortgage, it's mandatory that they go through counseling. And the counseling session's about an hour and a half to an hour and 45 minutes.
Now, who does the counseling?
It's by a HUD certified, Housing Urban Development certified counselor.
I see.
And their job is to ensure that the borrower is well aware of what they're getting themselves into, and they're going to be asking all sorts of questions. Today, there's about 10 questions that the borrower has to answer, but they don't know that they're being asked these questions, such as, do you know that the balance on the mortgage will get larger? Do you know that when you pay off the loan, when both borrowers are deceased, that the loan has got to get paid off? These are some of the questions they're going to be asking in the course of the counseling session.
I see.
So there's some safeguards there for senior borrowers. The most important thing is the borrower has to really do due diligence. They have to learn as much as they can about the reverse mortgage program, ask questions, and that's the reason why it's important to make sure that they try as much as possible to get a face-to-face consultation with a person, not just getting a packet by the mail and signing here, 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 and they get a loan done.
I would think that older adults, though, may have some difficulty in fully understanding all these financial terms, or and it becomes quite complex, I suppose.
That's exactly correct. And this
So
is,
what do you do? I mean, do the older adult depend on their children, for help, or how's this process?
would you like
Well,
to?
during the application process, we invite the family to come also, so they can be educated as well. Because it is important for them to understand what the parents are getting into.
Actually, Carrie does consultation first with their, that's generally our modus operandi. We actually have a consultation first, because I think before we even get to that point where they're doing an application, that they should be well aware of what they're doing. So we're spending a lot of time with consultation. To me and to us, that is standard. Consultation, so we might meet with them maybe 2 times before we actually take an application. And an application is taken only after the counseling session has been completed.
I see. So somebody would come in and talk to you first, and then they would
Exactly.
get a counseling session with the people from the HUD, and then they would fill out an application
That
if
is
they want
correct.
to.
That is
Okay.
correct. And a lot of times, even after they've gone through an initial consultation with us and the counseling with the HUD certified counselor. And even prior to doing an application, if we find that maybe there's got to be another consultation because we've got to talk to family members as well, there's another session. So
Okay.
we want to make sure that when they get involved, they know exactly what they're doing. And even at that, we explain to them 3 times and we draw all the pictures. Then even at that, after the application is done and the loan is completed, they still ask, well, why is it the balance keeps going up, you know? And so they still have challenges with that.
Sure.
And I tell them, don't be embarrassed to ask, because I was in finance all my life, and when I first got involved, I still had many questions. So we
Okay.
try to make sure that they're
Okay.
comfortable.
Well, let's look back at this whole question as to that older adult is coming to you basically because they need more money. They have maybe equity in the house or in their condo. But how do you address this whole question as far as how much are they going to be getting?
Okay.
The amount they get is based on their age and the value of the property.
Oh, and the age too?
Yes. So that's important, because the younger you are, the less you will qualify for. So it's the age at the time that they do the application.
Okay.
And then we look at the value of the property. We
Okay.
do have a lending limit, though, that we compare that to. So we take the lower of the 2 figures.
Okay.
And based on that, it's a standard calculation for all reverse mortgages. So everybody calculates it the same way.
Okay. We have a graph that perhaps we can use to share with
Sure.
our viewers as well. Can you explain what we're looking at?
Okay, so what we're looking at is, on the bottom is the age of the borrower.
Okay.
And to the left-hand side going up is the dollar amount that the borrowers can qualify for. So we look at 3 things: the age, the property value, and the interest rate at the time. And in blue is the calculation of how much they can get by age. So you can see the older you are, the more money you're going to qualify for.
I see, okay, okay. Oh, so if you had, let's say, a house that's worth $500,000, and so just
Sure,
hypothetical,
uh-huh.
what does that, and let's say I'm 85 years old, how much would I be able to get? Just like 70% of that or 80% of that, just
Yes,
hypothetical?
we have, it probably, we have a chart actually, and we have a graph. We
It
have
is a percentage, though,
Yeah.
based
Okay.
on the age.
Okay.
Yes.
So you'll never get 100%
Okay,
of the value of the property.
okay,
It's only going to be a portion, and even maybe at age 95, you're going to still only get maybe about 70%.
of the
of that.
value of
Yeah,
that 500,000.
right,
I
yeah.
see, okay, okay,
Yeah.
okay.
So on your chart, this was for a $650,000?
$625,000.
$625,000. So at
Yes.
85, according to your chart, you would be able to get,
About
400, yeah, and I'm sorry, we have a percentage chart, but I don't have that handy with me
yeah.
right now.
Well, I was just
We
to make
can-
it easier
yes,
because I know
yeah.
he asked you a different
Yeah.
house for a different amount,
That's
which
okay.
he was
That's
making it
okay.
hard.
Yeah, you know why? See, actually, we have another chart, we call it a cheat sheet.
Yeah.
And here we have them by percentages. So we either have a dollar amount and then we have a percentage on the side. So if the property is not 625,500, which is our area maximum, then we just take that percentage and we can do a ballpark figure for them.
Right.
And so unfortunately, it's sitting there on the other side, which I can't get to at this time, but
No, that's
but it is
okay.
a
We
percentage.
don't want to get
Uh-huh.
too hung up
Yeah.
on this, but the idea is you are going to get less, and you should go in and
Exactly.
talk to somebody and find
exactly.
out really
Uh-huh.
what it's going to be based on the value of your home
Exactly.
or your
Uh-huh.
condo,
Right.
wherever
Uh-huh.
you're living.
Yes.
Right?
Okay,
Okay.
right, okay.
Right.
I didn't mean to.
That's okay, no, that's okay, because we normally have that
Now, one of the
handy.
things that I guess we talked about briefly was some of the ways in which this money can be used, yeah?
Oh, yes.
And we had another graph here that kind of, that showed some of the various use, and you can perhaps make reference to some of these things, I guess.
Yeah.
Yeah?
Okay, so yeah, the money can be used for any purpose. There is, lots of people are paying off their existing mortgages. You can use it for in-home health care. So rather than having the borrower go to a care home they can stay at home, be taken care of in their house, which is what will make them more happy.
Right.
Yeah.
And use the money that way. Early inheritance, like we talked about earlier, giving it to their children to buy homes now. So, and then they can also thank their parents while they're alive.
While they're alive. Absolutely.
Yes,
Added income with everybody's retired at this age, so fixed income is hard to pay for the daily expenses.
Right.
So this is giving them additional income to help them. Also, we can do home repairs, remodeling. It can be used for all types of things like that,
Okay.
travel as well.
Okay, good. Good. All right.
most important thing, it gives them the freedom to enjoy their lives. And people have said, God, I'm so glad I did a reverse mortgage because now I feel relieved. And I find that I think I'm going to live longer because I don't have to worry about financial stuff. So that's a good
nice
thing.
idea.
Yeah, it's a really nice thing.
Well, what's the difference between my getting a home equity loan, say
Uh-huh.
from the bank, and getting a reverse mortgage? Like, how would I decide which of those I should do?
First of all, on the reverse mortgage, there's no monthly repayment, as Carrie had mentioned. On your home equity credit line, number one, you have to qualify. And then you also have to make monthly repayments. So that's really the biggest difference. And so if one is already retired and does not qualify because they don't have a monthly income, they're not
I see.
working anymore,
Okay.
then that becomes a problem.
Or if you don't have a monthly income,
You can't
You can't
qualify
qualify.
for home equity credit line.
I
And
see.
then we had a client who has never bought anything on credit, so he had no credit
no
history.
record. I
And
see.
he had money, but he just never had any credit. So the bank would not loan him money for a home equity credit line.
Okay.
Yeah,
He could very well start up his own credit line if he wanted to because he had so much money, but he wanted a credit line.
Right.
He couldn't get one.
So actually, that's an important thing for people
really
to
is.
think about then, because you think if you have plenty of assets, that you should be able to go ahead and get a loan, but it's not really how it works anymore. If you don't have
No. If you don't
an
have
income, then then that's another reason you would consider the
Yeah,
reverse
because then you
mortgage.
won't qualify for a home equity credit
I
line.
see.
I see. Okay.
That's
Yeah.
important information.
Yeah.
Now, going back to cost, with regards to how much does it really cost to get a loan?
Okay, first of all, there's a cost, but the cost is not out-of-pocket cost. So if they're entitled to a certain dollar amount, that cost is taken out of the loan proceeds. So they never have to bring to the table the closing costs, so to speak. Generally, if a person has a home that's worth at least $625,000 or greater, the cost to do the loan is about $22,000. And that includes, the biggest chunk is 2% directly to the federal government. Because the federal government will charge them 2% on the appraised value of the property, not to exceed the value of $625,500. So for many homes, we're looking at $625,000 as the base. So you take 2 points on that, that's $12,510 that goes directly to the government. And that's the insurance that they would have to pay. This insurance is to ensure that the lender will always be there to, if they have money that is in a line of credit, that they'll always have access to the funds. It's not to insure the home when they pass away, it's just a government insurance. And
see.
people keep thinking, oh, I'm paying this insurance, so when I die, there's insurance on the house. Tell them, no, it's an insurance for the government to ensure that you will always have, you can always live in that home for as long as you want to, even if there's no equity left in the house. And so that's the biggest difference on the regular loan and a reverse mortgage. That's the reason why it's over $20,000. If they do a regular loan, they're only paying for title insurance, which is about $2,200,
Appraisal fee,
appraisal.
termite inspection, escrow fees,
Yeah.
the basic loan costs, yeah?
So that's why when people say, God, the reverse mortgage is so expensive, it's because of that one element. And it's to protect them also, so they can live in the home for as long as they want to.
Yes, I want to. I see. Okay, okay. Now, you shared with us some slides also that we can share with our viewers that will help to explain some of this.
Oh, okay,
And this
sure.
is the first one having to do with that cost saver plan
Okay. Oh, okay.
again.
Oh,
yeah.
yes. there is another program, so if a person does not want to pay $12,510 on a home that's worth $625,000, they don't want to pay that high insurance, the government came up with a program that actually charges them much less. It's 1/10 of 1%, or $62.55 is all that they pay to the federal government. But then what they would get would then be a lesser amount in a loan amount. So there's kind of a drawback, trade-off. So more money if you pay the insurance. You pay less insurance, you get less of a loan amount.
I see.
Oh, I see.
And one of the other charts, if you
Yeah.
had indicated that if you take the Saver program, you get way less money. And that one of the other
So
charts had
the
indicated
standard
that.
reverse mortgage, you're paying a bigger closing cost of
right.
$22,000, so supposedly on
Right.
$635,000 value.
$625,000 actually.
And then
yeah.
the other one, you pay less as far as closing costs.
That is correct.
And do you prefer one over the other when you talk to your clients?
It all depends on the client's needs, right?
Right.
So,
We look at everybody's situation and kind of customize it
I
to their
see.
needs.
I see.
So if they don't need as much money, maybe the Saver program might be better for them.
I
Or also if they're older, they may benefit from the Saver because they won't have to pay as much mortgage insurance premium.
Oh, right.
because there's no refund when they pass away. You're working on a 95-year-old person, and they don't need that much money. So, maybe the Saver might be better because they're not paying that much.
Well, that kind of leads us into the next question about inheritance. So can mom and dad, when they pass away, did the kids get the house? Is that possible? How does that work?
Okay.
Well, the mortgage has to be paid off first. So they will determine the family will determine how they want to make the payment, either by refinancing the loan, the reverse mortgage, and paying that off. Then the property can transfer to the children. Or selling the home and using the proceeds to pay off the loan that way. So they may not have the home as their inheritance, but once they sell it, the proceeds are used to first pay off the mortgage, and any excess can then be distributed to the family.
I see. And if they want to keep the home, how long would they have to be able to, pay off the loan so they could keep it?
Okay, so there is an initial 6 months to settle the debt. Once the last borrower is no longer living in the house, then they have the initial 6 months to settle the debt.
I see.
Okay. We have another graph that you shared with us.
Yes.
Maybe you can
Sure.
explain what this is all about.
Okay. This is, I remember a long time ago when we first started, people were always concerned, oh my God, I don't want to do the reverse mortgage because I'm going to leave a huge debt for my children. And we wanted to assure them that under this program, because there's insurance that they have to pay, that $12,510, that 2% that I mentioned. So if the house is worth $500,000, well, then they pay $10,000 to the government. Well, that's what they pay to the government to ensure that when the person passes away, on the chart on the left-hand side, let's say the borrower had this loan outstanding for like 15, 20 years, and the loan balance has gotten quite substantial, and then at the point in time when they're ready to sell the property, the estate is ready to sell the property, so through the proceeds and the sale of the property, they're going to satisfy the outstanding debt. Well, let's say the outstanding debt is still larger than the proceeds that they get after the sale of the property, and they apply that to the loan. That excess is what the insurance will cover, and that's where that portion is going to be forgiven by the federal government. And so that's the reason why today we can truly say, when we stand up and say, when you do the reverse mortgage, you will not leave any debt for your children, and that's what that is. They'll never leave a debt for their children.
I see. So it isn't up to the estate or the children to pay that extra. That
That's
would be
correct.
above and beyond. Okay.
And so the nice thing is, on the right-hand side, if the home value, as it has been in Hawaii, keeps going up, that the loan balance may be lower than the value of the property. This is where if there's any excess equity, as Carrie had indicated, then that'll go to the children. So it's
Okay.
it's kind of the best of both worlds.
How about the new regulatory changes? You were talking about that, I think, before we got started today.
Yes,
So what kind of new regulations are happening?
Okay, the one thing that is going to be it's going to be inevitable, and that is they're talking about financial assessment. And in looking at financial assessment, basically what they're looking at is they're saying, okay, after the government insures this loan, this FHA loan, will that borrower have the capacity to continue making their payment for property taxes, homeowners insurance, and hurricane insurance? And if the residual income that they show is insufficient to take care of this, number one, they might go ahead and say they're going to reserve a portion of the loan amount that they're entitled to and keep it on the side so they can be assured that the property taxes and homeowners insurance will be paid. Now, in many cases, that's not sufficient. The remainder is not sufficient to cover the outstanding debt, mortgage debt. So then it excludes them from being able to do the reverse mortgage.
I see.
So that's
It's going to be tougher then.
It's going to be harder.
After when is this?
October 1st.
October 1st
yes,
of
this
2013.
year, right.
Wow, wow.
And it looks inevitable that that's going to be happening because our National Reverse Mortgage Lenders Association, our trade organization, is behind it because HUD has a deficit on these loans that they have outstanding.
Okay. Well, we're just about out of time right
I'm
now,
s-
so I
okay,
wanted
sure.
to sort of end with one last tip that you can suggest. You know, there's so much information here, and I'm sure that our viewers have a lot of questions to ask. But so, what is one thing that you could suggest to our viewers?
Why don't they just give us a call? That might be the best bet.
Okay.
And if they're thinking of anything, if they're thinking of accessing the equity on their home, act quickly.
Okay,
Don't
and we have
wait.
their phone number, your phone
yes.
number up here that we can share on this through this particular screen. So you get that 526-2499 number.
That is correct.
And so that would be a good way to clarify some of these issues. Yeah.
We just want people to call and ask because it doesn't cost anything for them to find out.
Right.
So,
Okay.
thank you
okay.
so much.
You're welcome.
Colin and Tony, thank you for the opportunity to be here today.
You're welcome.
Much
Okay,
appreciated.
so that's about all the time that we have today to talk about reverse mortgage. Quite a complex issue, but one that's very important to all of our older adults in the community today. So thank you again for watching, and see you again next week. Aloha.